Hey guys, John Paulamy here, Actionable Intelligence. Today is Saturday, October 27th, 2018, and this is the weekly market update. So first things first, KazAtomProm announced this week, or earlier this week, that they were going to list up to 25% of the company's shares on the London and Astana stock exchanges. And basically, this company is the state-owned entity that dates back to the Soviet times, and its function is the production of uranium. It is the largest producer in the world. Everybody knows this, and many people that have been following uranium have been speculating when they would bring this company public. I don't really understand the reasons why they're doing it. The Kazakh government is taking several state-owned enterprises and listing some percentage of their shares in the open market. I think this is a way to monetize some of those assets and also get a valuation attached to those state assets. I mean, if you list 25% of KazAtomProm, you will get a valuation from the market. You will then be able to extrapolate from that what the company is, how the market views the company's worth. But anyways, I think one of the things that is most important about this is the fact that obviously when you do go public like this, you want to put the best face on things. You want it to be perceived as being successful. So I kind of go back to the old Charlie Munger anecdote. Show me the incentives and I'll tell you the outcome. So the hope here is that as the Kazakhs bring this entity public, they will be incentivized to shift from their production focused mentality to a more market price conscious maximization of the asset focus. I mean, let's look at this. I mean, Kazakhstan was a former Soviet republic. I mean, when the Soviet Union collapsed, there were still a lot of apparatchiks and people left over from Soviet times that were running a lot of these state industries. You don't necessarily get advanced in these things based on merit. I think that's how things were being run for many years. The goal was always to have production and meet the 5-year plan, if you will, regardless of the profit motive or what the costs were. I think that in recent times, as more and more people from the former Soviet Union have been educated in the West, and as a new generation of leadership starts to emerge, and as exposure to the West and capitalism increases, the profit motive becomes more of the focus. And I think that, you know, the hope here is that KazAtomProm seeks to maximize their asset and not just flood the market with uranium. There was a interview with the CEO of the company on CNBC. I will put a link to it in the show notes. And he suggested this much, the same what I'm saying. But, you know, you're dealing with people that, you know, in the past have said things and then done the opposite. So we can be optimistic. I hope that the Kazakhs now will maximize an asset, try to get the most out of it, that they will hold to the production cuts that they've announced, that they will help to bring this market into balance. This is just a chart that I got out of one of the articles that was talking about the private placement or the going public. And as you can see, KazAtomProm is, you know, 20%, 19.5%, 20% of the production of uranium in the world last year. You'll note that the former Ariva is called Orano now second, and then Cameco's third. You will notice you don't see any of the juniors on there because they don't produce anything. If any of the smaller producers are represented, they would be in the other category. at the bottom. So last couple weeks we've had a lot of volatility in the markets. The U.S. stock market has got clobbered. I wanted to bring this up because here's an example right here, I think, of how you can make volatility your friend. This is a stock chart of Uranium Participation Corp, which does nothing but buy physical uranium and store it. So the thing about this company is that there's no mining risk, there's no political risk. It simply stores yellow cake in barrels in a bonded facility, and you can buy this company if you wish to own physical uranium. Now, about once a month, Uranium Participation does what's called a net asset value report. They will report their holdings, and you can determine from that the net asset value, whether, relative to the stock price, whether you can get it at a discount or a premium. And as you can see, over the last several weeks, as the stock markets have been volatile and been in a downtrend, Uranium Participation stock is off about 10%. Now, the actual spot uranium prices actually ticked up a bit. So this is a perfect example I'm talking about, the irrationality of a market. The actual physical uranium, nothing's changed in the uranium market. The supply-demand fundamentals didn't change. There's been no, reactors not going to be built, or, Japan's actually turning on another reactor this week. So all the fundamentals remain in place. But when liquidity dries up, when volatility comes to markets, everything gets sold. All stocks get sold pretty much during the panic phase, during the phase where everybody is getting nervous. And uranium stocks are stocks. So here's an opportunity right here where after last week, the price of Uranium Participation has declined 10%. The actual physical price of uranium has actually ticked up a bit. You're able to actually buy physical uranium at a discount if you go in and buy these shares. So this is what smart people should be doing. I mean, this is an excellent opportunity. This is basically, if you believe in the uranium bull market over the next 3 to 5 years, if you believe that the uranium price has to rise, or as Rick Rule says, the lights go out, then you should be in there Monday morning buying this physical uranium. You have no mining risk, you have no management risk, you just buy it and hold it. And the fundamentals haven't changed. It's the same thing in the oil market. I mean, oil prices dropped off quite a bit because of all these little political machinations that are going on with Iran and the Saudis. Now they're going to raise production. Before they were comfortable with the oil. I mean, if you're trying to speculate and invest based on these short-term swings, I don't think you're going to be successful. That's the point of this whole thing. And if you have a long-term 3 to 5 year plan, which is, I want to stipulate that when I'm talking about these various speculations that we talk about weekly, we're talking about long-term, 3 years minimum, okay? So if you're not willing to hold these things for 3 years, if you're not willing to ride through these things and let the characteristics of these markets play out like we think they are, and if you're just going to try to trade in and out, I don't think you're going to be successful. You may be, but I can't do it. So I just wanted to show this because this is just a representation of what you will see in a lot of the oil services stocks, which you will see in various other stocks that are got beat up in the last few weeks, just because when the stock market goes down, most stocks go down. That includes uranium stocks, offshore drilling stocks, whatever. People are just going to say sell, get me out, because their parts of their brain, fight or flight, takes over, and they just sell, get me out, because they get scared. And then, of course, they buy in, they sit on the sidelines as everything recovers, as the fundamentals actually then take over, which they inevitably do. In the long term, fundamentals, guys, are what determines the stock price, not short-term news items. I mean, you can go at any time in history and look through newspaper clippings or whatever, and there's always bad news on the horizon. There's always wars and rumors of wars. There's always going to be something going on why you shouldn't be in speculating or investing. Now, that doesn't mean that we don't get to periods of overvaluation. I believe the U.S. stock market is overvalued on historic norms, but that's going to reset. You know, if you look at the 10-year CAPE, for example, 2008, and that destructive part of the nature of what's being factored into the CAPE ratio, that goes away this year. Also, earnings are still doing very well. They could be up 25%. That's going to push down the average PE ratio. So what I'm trying to tell you here is that, guys, if you have a view, if you have articulated a view, let's use uranium for example, we are buying this because of supply demand, because more reactors are being built, because no investment has went into building new mines in years because of the low price, and we have now speculated that that's going to cause a rise in the uranium price, then nothing changed this week except for the fact that you can buy these assets cheaper than they're actually worth, and that's a good thing. As far as the markets go, I mean, I don't like to predict markets, but I'm just going to go ahead and say this. I do not think, with the way that the current economy is, and it is booming on all metrics, people can argue about that stuff, it's false boom, whatever, I'm not going to get into that. The fact of the matter is we do not have an inverted yield curve. The fact of the matter is that PMIs are very high, reports are very high, unemployment's very low. Am I saying this is as good as it gets? I don't know, but I think that this pullback last week was a correction, and I think before this bull market is over, we will see sediment levels getting to the euphoric stage. We have not seen that yet. And let me tell you what I think the catalyst is going to be. We have an election, a congressional election coming up in like 10 days, 9 days, whatever it is. Because of the things that have happened recently, what I think is going to be a catalyst for a big rally, and I could be wrong, but the way I'm looking at this is I don't think the media and most people are understanding that I believe that the Republicans are going to outperform in this election. And let me tell you why. This recent thing with the Supreme Court Justice Kavanaugh and all this stuff, it's really pissed off a lot of people. I mean, and the way that the Democrats are shown to be acting, and a lot of these progressives, whatever you want to call them, these neo-Marxists is what I call them, these radicals, these revolutionaries, running around in the halls of Congress, banging on doors, screaming and hollering, throwing stuff at people. I mean, it's like a bunch of, you know, it's like the chimpanzee exhibit at the zoo, throwing crap, you know, at the people watching them. And people look at this. Most people in the world, most people in the U.S. are not radical people. Most people just get up, go to work, do their thing, and they look at this stuff and they're going, gee, this is really not hinged. These people are unhinged. They may actually sympathize or have a view that's sympathetic or empathetic towards, you know, progressive ideas, but when they see people throwing crap around, throwing shit against the wall, nobody likes that. Going into a restaurant and screaming at somebody's wife, and just because you don't like somebody's politics, I mean, this is just, I mean, it's boorish behavior, it's unhinged, and people don't like that, regardless. I just don't think that this is, you know, Russia in 1917 or, you know, France in 1785 or whatever. It's just, you know, we're not going to have a revolution here where we're going to guillotine a bunch of people's heads off or, you know, have a civil war. People are kind of aggravated, and I think they're going to go to the polls and they're going to show people that, you know, the president's more popular than people think. Look at the rallies. He's getting 100,000 people at these rallies and people standing outside. That's not a blue wave, ladies and gentlemen. I'm just sorry, it's not going to happen. So what I think is going to happen is president's going to outperform, Republicans are going to outperform, and that's going to kick off a rally because he's going to be talking about more middle-class tax cuts and who knows what. So that's what he's all about. I mean, that's what the whole thing's about. It's a confidence game. It's a, you know, keep the game going, rah, 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 spirits, animal spirits, all that stuff. And eventually, yes, we'll have a top. But, I mean, markets normally have to have, they don't just die with a whimper. They die with a bang. And, yes, I mean, this is the most hated bull market that I've ever seen before in my life. Every time it makes new highs, people are poo-pooing it. We're going to have a crash, all these other things. That's really not how things work out. The sediment has to be really, you have to suck in, as I said before, you have to suck in every last dumb dollar, and that just hasn't happened. There's a lot of people that are still on the sidelines, don't believe this thing, and I think that could be a catalyst that kicks us off here in the next couple of weeks. We have a big rally if the Republicans outperform. That's basically what happened after Trump got elected. We had this big run in the market, and I think that there's a fear that if the Democrats were to get the House, that it would stall, the program. But I don't think that's going to happen. I think they may take the House, but barely, and there's a good chance, or there's a coin flip chance that the Republicans hold on to the House and increase their lead in the Senate. If they do that, then I think you would have a huge rally in the stock market. But that's really irrelevant for what we're doing here. Nothing's really changed in the commodity markets that we're looking at. World growth is still there. Yes, it's slowing down, but the PMIs in China and in Germany, places like this, are still above 50. They're still above 50, and I just don't. When it comes down to it, we're not going to have a deflation. The money printing will come. So, just wanted to talk about that and expand on that, and that kind of segues into this last chart I wanted to talk about today. I cribbed this from Marin Katusa off of Twitter. And basically what it shows in black is, or in yellow, is the price of gold going back to 2000. The graph in black is the price of Gold Corp, which is, for lack of a better term, is probably the blue chip go-to gold mining stock. And as you can see, they've basically tracked fairly closely. As gold price went up, Gold Corp followed. But you've seen since the peak in 2011, early in 2012 in the gold price, there's been a big divergence with Gold Corp really underperforming the gold price. And I think that I'm not ready to buy gold yet. I do hold gold royalty companies. I do like those. I think they're good business models. The reason I've been accumulating them in one specific small gold royalty company or precious metals royalty company is because during these times when the gold price has not really performed, or the sentiment towards gold stocks is very low, these gold royalty companies have been able to sign very lucrative royalty deals with the gold mining companies. And I think that it's kind of like planting an apple tree or a nut tree. It takes 5, 6, 7 years before the tree matures and starts producing fruit. And I think, not that I think that's going to take 5 to 7 years for a gold rally, but what I'm saying is that these royalty companies have been able to plant the seeds that are going to lead to great growth and huge harvest once the gold price does recover. And I think it's inevitable that it does. I think it's inevitable we have a recession, we have a debt crisis. I don't know how it's going to play out. I don't know when, but I do see it coming. I mean, we are going to go through another debt cycle. These things are cyclical just like everything else. And when that happens, the Federal Reserve is going to reverse its tightening, go to loosening, and I think we're going to have a huge gold rally. I don't know when that is, 18 months, 2 years, who knows. But the point is that gold stocks are very cheap. I don't necessarily like to buy mining companies in gold. It's a very tough business. You know my feelings on it. So royalty companies, I think, are something that somebody could be looking at to accumulate. I'm not really recommending any except for one in the newsletter right now, and it's a junior that's doing very well and paying a dividend. But I think it's something to keep an eye on, and it's something that we'll be revisiting. And as the opportunity matures, we may be taking some positions. So that's it for this week. That's it for this week, guys. Appreciate the support. I get a lot of good comments. I appreciate the positive comments, and let's keep subscribing. If I can get the subscriber count over 1,000, I think I may be able to get some guests on here. It's kind of hard to go to people and say, hey, can you come on this podcast and give your views, or come to do a video with me, and they're like, oh, this guy's only got like 700 people or whatever. So if we can get this thing over 1,000, if we can get some momentum going, maybe we can start getting some guests on. And I don't want to ask the fluff questions. I want to ask the hard questions. I want to get some of these mining CEOs on, if I can, and put it to them. And if they won't come on, we want to tell them, hey, we won't come on the show that asks hard questions. I'm not going to have people just come on and tell me unicorns and rainbows. There's companies out there that are talking about they're going to go into production to produce vanadium. I want to know when you're going into production. What's the cost? When's this going to happen? What are the projections? And if they won't come on and talk about that, then I think that tells a lot. But it's hard to even approach these people if we don't have a critical mass. So that's what I'm asking for. It doesn't cost anything to subscribe or hit that bell, so I ask you to do that if you are so inclined. That's it for this week, guys. Thanks a lot, and we'll talk to you next week.